Hello, everybody, and welcome to our panel on CEE, Central Eastern Europe. We're stretching the definition of Europe a little bit here, as you'll see, but our panel on CEE sovereigns, their reactions to the COVID-19 crisis, their funding plans to allow social and economic mitigation of the results of the crisis. We're here recording at the end of May, and our discussions will form part of the GlobalCapital Euromoney 2020 Virtual Global Borrowers and Bond Investors Forum, which will be on in a few days. Also, of course, we didn't get to meet where all of us might well have met at the annual meetings of the EBRD this year, which would have taken place this month. So we're also flying today under the banner of Global Markets, which, as you all know, is the daily newspaper at all the main multilateral development bank meetings, including, as far as we know up to this point, the annual meetings of the Bank and Fund in Washington in October. So I'd just like to introduce the 5 panelists who are here with me in the virtual world. Łukasz Januszewski is a board member of Raiffeisen Bank International. He's the board member responsible for markets and investment banking. Audrius Želionis is the director of the State Treasury in the Ministry of Finance of Lithuania. Odilbek Isakov is the Deputy Minister of Finance at the Ministry of Finance in Uzbekistan, and he does have particular responsibility for external borrowings also. Marjan Divjak is the Director General at the Ministry of Finance in Slovenia, and again, similarly, is a borrowing guy, a markets guy. And last but not least, Yuriy Butsa is the Government Commissioner for Public Debt Management in the Ukrainian Ministry of Finance. So they're all borrowers, they're all market men. Just to get the conversation started off, we'll turn to Łukasz, and you'll know which one he is because he's got a beautiful yellow Raiffeisen Bank International sign right over his left shoulder. Raiffeisen has, of course, very kindly sponsored the event that we're holding today, and we're delighted to have both them and Łukasz himself here. So, Łukasz, all the countries in Central and Eastern Europe, broadly defined, are obviously expecting lower economic growth and indeed contractions in many, many cases as a result of the COVID-19 crisis. But just to start us off in general terms in a couple of minutes, what shape do you think recoveries will be? There is a lot of optimism, a lot of talk, a lot of analysis about 2021 bounce backs and V-shaped recoveries in various places. Some places they're more driven by hope than expectation, perhaps. But there does seem to be a slightly better outlook for CEE. What's your view? How would you characterize that?
Thank you very much for that question and the opportunity to share our view. Our research, Raiffeisen research, is actually forecasting, as most of the houses right now, the hit in that year, in 2020. But we are expecting a rebound in 2021. And of course, nowadays is based on some assumptions that I need to share with you to build a picture. So there are many people talking that in the autumn there could be a second wave, which we don't know. So we've got an assumption that there might be, but we don't expect the let's say repetition of the approach to the lockdown, like 1-to-1, what we have experienced over last recent weeks. So if that would be the case, so if we would be somehow locked again in the autumn, for sure it would have a severe impact in 2020-21. But we try to be optimistic on the one hand. On the other hand, we also believe that we all are on the learning curve. So all the governments, so all those officials who took the measures for the good the nation societies are now looking back when opening, and they will have their learning. So even if we would have like an additional wave, I would expect that let's say the measures would be based on the learnings, and we could be more accurate, and that would have a smaller impact than the one that we have experienced over the last weeks.
Could I just ask you, absent a second wave, if the second wave proves not to come, then you're perhaps reasonably optimistic about a pretty strong bounce back. Would that be fair?
Yeah. If this is not the case, we believe that already in 2021, we would say in most of the markets, the GDP between 3 to 6% growth in CEE in our countries, and this is based on our assumption that let's say the measures which are taken by the governments, but to support the economies, but also let's say that people coming back to a bit of modified but still normal habits and behaviors that would boost the economics. But I cannot be fully optimistic. There for sure will be some big market segments, like a big question mark about you know, the airports, airlines industry, and or around which are still, let's say, to forecast it, it's still premature. So yeah.
Yeah, well, tourism is an obvious sector, and tourism is relatively important to a couple of your countries, Slovenia, I would say, and perhaps Lithuania, perhaps less so Ukraine and Uzbekistan. But let's turn to the countries. Marjan, let's start with you. I mean, one of the metrics I think people are going to look at is however the economic recovery runs, and let's hope there is an economic recovery in each country next year. People are going to look at how long will it be before we're back to where we started in the beginning of 2020. I think that's probably quite a key metric. How are you looking at what might impede or provoke a strong recovery in Slovenia?
Thank you, and hello everybody. Very happy to be here on this panel. Indeed, as you pointed out, Slovenia is a very small and very open economy. End of this year, it was projected before the crisis, Slovenia export to reach 9% of GDP, which is big actually export scale to GDP, of course. So it will very much depends on how actually economies will operate after the relaxation of the containment across the globe. So for Slovenia, it is necessary to say that the export sector is very, very resilient and very competitive. I would say it is extremely competitive sector. This was actually seen in 2009 when the export dropped significantly, similar to what we project now, and rebounded immediately in a couple of months' time back to pre-crisis levels. During the crisis 10 years ago, the problem was in Slovenia domestic demand, coming from the problems in the banking sector. We are now facing a completely different situation because the banking sector in 2013 and 2014 went through thorough asset quality review and stress tests, and it is in very good shape. So the composition of banks' balance sheets is very good. Funding is coming from domestic deposits. Loan to deposit ratio is 70%. Banks are highly capitalized. So I believe in Slovenia we have very good chances that economy, if there is no let's say, large-scale second wave of coronavirus problem, we are in very good position to reach pre-crisis levels already in 2021. So
okay, well, that's positive to hear. Sorry to interrupt you, but we need to got a lot of ground to cover. Marjan has already raised what is a very interesting point, I think, and particularly interesting in the context of this region, which is the comparison with the global financial crisis of 10 years ago. Audrius, let me turn to you and just a quick mention of what your expectation is for Lithuania, but I'd like to bring out this point. There is a school of thought, there's an opinion, an analysis that suggests that because CEE countries have been, in a sense, more used to crisis, they have more space for volatility, that they will be able to recover much more quickly because they recovered much more quickly from the last crisis, so why shouldn't they recover from this? Audrius, do you buy that argument?
Hello for everybody. Thank you for invitation for this distinguished panel. First of all, I think that, of course, we reached some experiences from previous crises, and even coming back to year 2000 and also year 2008. Of course, now we face different situation in Lithuania as everywhere. So we were in much better shape in comparison with 2008 or 9 year. At that time, some collapse for some industries was occurred quite substantially. As well, it was also banking crisis, and also we were at that time not Eurozone member. So all in all, it was much bad situation in that respect. We come back to this crisis evaluation when we started calculations in mid-March, and then also calculating our borrowing requirements for crisis period for this time, because at that time it was no statistics, and it was quite difficult to evaluate in a couple of days period and then to take some calculations. But at the same time, of course, now we are facing much better shape. So our expectations that drop down on GDP for this year should be around 7.3%. Of course, there are different estimations. IMF expect that it should be around 8%, but the Lithuanian Minister of Finance sticks to 7.3%. And the reasons for recovery, we see that even the first quarter of this year was with GDP surplus growth on 2.6%. So even in that position, then some other countries in Europe already faced some recession. So Lithuania still faced the growth. So this is one point. Another one, of course, we stick a couple of years in very strict fiscal positions, and it helps us to prepare much better for crisis period and accumulate some reserves, and also this gets some additional possibilities. And also you mentioned that we are maybe more flexible for resilience to crisis impacts. Yes, I think that also some experiences which was reached just after crisis in year 2008, and reorientation of businesses, small, medium-sized businesses was the case. Now it's and even the crisis after when some sanctions for Russia was introduced after Crimean events. So also impacts the Ukrainian export, first of all. So all in all gets experience, which we faced now, that it gets to be more flexible, to be more open, and to be more fast moving in right directions. So
okay, so you have, the argument holds that you feel that countries in the region have access to a toolkit and they know how to use it, whereas perhaps some other countries have not experienced this degree of volatility.
Small and open economy, so small and open means that we must be flexible and fast.
Of course, of course. Odilbek, how are you viewing the likelihood of the outturn in 2020 versus 2021 in Uzbekistan?
Well, in 2020, our growth forecasts have gone down from around 2% to 1.5% to 2%. So we're still growing in 2020, but now the growth estimates are about 4 percentage points, 4.5 percentage points lower. Reasons are obvious. And in terms of 2021, the estimates range from 6 to 7%. Łukasz was absolutely right in terms of the second wave. There are so many known unknowns right now between now and 2021. Whereas, while in Uzbekistan we're still taking COVID-19 very seriously and quarantine measures are in place, we have started differentiating from one region to another region. So we have different rules applying in one region if there is less risk of infection or less record of infection versus the others, and allowing more freedom of movement, more freedom of trade in those regions where there's a less risk of infection. Obviously, throughout the crisis, agriculture was very much untouched by the quarantine measures, because agriculture, that's about food security, as well as, given it's an open large space, there's much less risk of infection than in cities. And we have around 1,000 companies in Uzbekistan which worked non-stop during the quarantine period. These are obviously metals and mining, energy sector. Those are vital to the economy. Now, 2021, if you look at the IMF, if you look at World Bank, the estimates range from 6 to 7%. Fitch expects 5.8%. And I think this is more like Uzbekistan is going back to its growth trajectory. I wouldn't say it's very unusual, to be honest, because we were expecting to grow by over 6% next year as well, given the investments in the economy, given that the reforms that we are implementing, opening up the market, the drive to privatize our assets, everything is actually now paying off, started paying off. And therefore, 2021 would be back to normal, hopefully, subject to those caveats that I mentioned, like if there's a return of this pandemia in autumn this year, then that obviously will change the forecasts.
I think we have to admit in everything that we say that should there be a sudden new spike of infection globally or in certain areas, then that really does change everything. But just at this stage, we'll talk in some more detail about the privatizations, because we're going to be country specific with each of you in a moment or two. But Yuriy, just give us your kind of general, your bird's eye view of where you stand at the moment. Obviously, the thing that's very much in the news is the IMF program, but let's not go into too much detail about that. But just generally in the economy, how deep this year and how steep next year?
Yeah, thanks, Chris. I think what the last thing you mentioned, it's really important that we cannot use traditional economic tools to predict the recovery of something which was caused purely by non-economic factors. So we can do rather like normal predictions if everything normalized, but that's provided that first of all, some vaccine is created or there are no another spike of the crisis and we don't come back into the lockdown, because otherwise it immediately changes all the calculations. And second thing, which also is big unknown for us in terms of any forecast, is actually what will be the behavioral patterns of the people after they come out of the lockdowns. I don't know, colleagues, what you experience in your countries. We have a nice natural experiment starting from Monday when we reopened the subway, and pretty much only quarter of the regular passengers are there. So people change their behavior, and for Ukraine, consumer demand was always the main driving force behind the GDP growth in last years. So we don't know what form of this consumer demand and in which size it will actually be there. But anyway, we came, as my colleagues also said, we came more prepared to this than in 2008. Obviously, Ukraine, as other countries, had its own banking crisis, and we had even another crisis caused by non-economic factors back in 2014, which pretty much showed all the inefficiencies in the economy. So obviously, 5 years of prudent monetary and fiscal policies helped a lot. We decreased debt to GDP from 88% to below 50% in 4 years, which gives us enough of fiscal space to react now. We also brought down inflation to low single digits from as high as 44%. So we have enough of room to add now. We feel comfortable from our tool set standpoint. We also, when you look at the balance of payments, contrary to, like, say, Slovenia, which rely a lot on the tourism as well, in Ukraine, actually, maybe it's wrong to say, but we benefit from the fact people don't go abroad and don't spend their money, because the ticket for Ukraine is $9 billion per year, and probably a big part of those money will be somehow or saved or spent within the country. We also, on the downside, obviously, we lose big part of remittances. It's like it was roughly more than 10 billion last year, and we also need to account for this. But generally, we see the balanced, pretty much, performance of the economy. So given that two main driving sectors of Ukrainian growth in terms of exports is agriculture, which obviously was not hurt that much, because people, if they stop consuming something more expensive, they anyway eat. And second is IT. For those, it doesn't make big difference whether they stay at home in front of their computers or in the offices. So we see that pretty much there are good chances of the rebound next year if non-economic factors don't come into the game once again.
Okay, and also, of course, you've finally managed to get a big vote of confidence for tidying up the banking ownership question.
Yeah, indeed.
I can't go into detail, but it's obviously a very significant thing. Now, thanks everybody for just giving your kind of initial sort of elevator pitch. None of us here is an epidemiologist or medical expert. We're all a bit more on the financial side of life. But one thing that does strike me as very interesting, and is certainly significant, is that if we look at the 4 countries here, the further west you go, the worse the pandemic has hit public health. And I've got the figures here. There may be a couple of days out of date, but just looking in a per million of population infection, Uzbekistan has 82, Ukraine has 450, Lithuania has 554, and Slovenia has had 700. Now, these are tiny numbers in comparison with Western European countries or other countries around the world. But it is interesting that the further west you go, the less it seems to have been a major, the pandemic seems to have had a major impact. And of course, Western Europe is in the economic health of Western Europe is incredibly important to all of you in terms of supply chains and export markets and sources of tourism and so on. But I just wonder if anybody here, Łukasz, maybe you with an overview of the whole region, to what do you ascribe this variation, quite dramatic variation in effect? The further east you go, the less it's been a problem.
Well, I would look for, I think there are several facts that we should stop and look at. First, let me recall my experience when I remember I had like a first type of a crisis call with all my colleagues from network banks from our 13 countries. And what was at that time, mid-March, very interesting to me is that when we had each of us talking like, you know, for 2 or 3 minutes, giving a short update what's happening in the country, the more east you went, the let's say the COVID situation have not at that moment reached those countries yet fully, which means that countries definitely had more time in a way, and they used this time proactively to prepare and to learn from what was happening in Italy, for example. And I think that's one factor that being able to prepare a bit. Second, I think when you look to our region, maybe apart from Moscow, there are not so many double-digit million cities, and there are not so many, let's say, big and I would say cities which really live in a, I would say, global terms way of living, like big huge Western or Asian metropolis, and I believe this could be another way of let's say another reason that just less people commute in the public transport in general. You know, I'm coming from Warsaw originally, where we have only 2 underground lines. So I mean, people are using more cars, I think, and because we are not, you know, doctors and have nothing myself to do as only a being from time to time patient with medicine. And, I mean, these are the reasons which are coming to
we
mind.
describe. We can point to various demographic, sociological, geographic even features. I mean, Odilbek was telling us about the different regimes that now exist in different cities and regions of Uzbekistan. Of course, a vast country compared to any of the others. Well, Ukraine's pretty big too, but does anybody, I don't want to spend too long on this kind of medical side of it, but obviously it is the starting point for the whole conversation. Does anybody want to add anything in particular about their particular country and why they feel that the pandemic has been contained effectively there?
What I can,
so you might want to say something.
Chris, what I can add is obviously in some ways we've been lucky. Why? Because as Łukasz mentioned, we had a little bit more benefit of time, both from China, from the east and from the west. And the second one, our decision, government's decision, was very, very swift. Our first case of COVID-19 infection was on the 15th of March. 15th of March, and within 5 days, country was almost in total lockdown. After, like, in about 10 days time, you couldn't even drive your car in the streets unless you have a special permission. So this way we managed to put people in their homes. Very little movement, apart from very essential trips to shop, to do some shopping or some other very essential trips. But essentially we managed to keep people at home, and that's how we managed to get to flatten the curve in terms of number of people being infected. Right now, number of people being infected, 3,200 people in a country of 33.8 million. And it is growing, unfortunately. I was hoping that by this time we'll have single-digit numbers per day, but now we still have double-digit numbers, so 40 to 70, depending on the day. But I think that strict quarantine measures, although it hurt the economy, nearly 14,000 businesses stopped with immediate effect. It was very rough, but we also, I mean, I don't want to go into detail, but we also alleviated the economic side of the crisis by offering tax breaks, offering salaries to those people who are infected, who are sort of affected and should move and so on. So there's a $1 billion package that we have introduced immediately within 4 days of the first infected case. And I must say we learned a lot, and implementation was very swift.
Odilbek, I'm sure it's a very good story. I'm sure everybody has similar or slightly different stories of policies they put in place and so on. But unless anybody particularly wants to add something that they think is unique about the way they've tackled this, Marjan?
I would add a couple of thoughts on this. I mean, in Slovenia, the government responded very quickly and very efficiently. So this is one of the reasons, or I would say even this is key reason why the infections are now fully under control. There are 20 or so active cases in Slovenia. We don't have new infections, having in mind that the government declared the end of epidemic on 14th of May. So this is one reason. Another reason is, as it was already mentioned, that it is much easier to actually to contain things in Ljubljana than in New York, for example. So the structural differences are important. And I would only add that if there is second wave, it will be important how governments across the globe would respond. And I believe that we learned a lot, and we would be in much better situation.
Good. Well, an optimistic feeling all around. I mean, it was noticeable. I think Slovenia was actually the first country in the world, apart from the couple of countries that denied it existed in the first place. Slovenia was the first country in the world to declare it was over. And let's talk a little bit more about market activity and what you've been doing and what you're planning to do. Just as a quick summary, Yuriy, obviously Ukraine had a very successful bond issue in January before the crisis. Odilbek, you launched Uzbekistan's inaugural sovereign bond issue last year. It's fair to say that the most eye-catching issue was yours, Audrius, where you did a €2 billion bond deal only a few weeks ago. And Marjan, of course, Slovenia did a €850 million tap, sort of as the crisis was getting going in late March. So I just want to ask you, Audrius, may I start with you? Just tell us a little bit about that issue that you did that was so successful and oversubscribed, and just tell us what your funding plans, and if they're COVID-specific funding plans, are looking like for the rest of the year. But were you surprised at how successful your issue was a few weeks ago?
So I think that it was also a reaction for the crisis period and starting increase in our borrowing requirements immediately after the statements on the quarantine regime was introduced. And also we calculate our appetite for additional means, keeping in mind the absence of statistics, coming back to our crisis period in the year 2009 practically. So 5 billion was the amounts which we calculated, roughly calculated that it should be the possible need for stimulation of economy as well for COVID crisis related issues, and practically we stick to such amount. And immediately we do just not only the step going to the foreign capital markets because volatility was there, but we do in three directions. First of all, we stabilized our domestic borrowing, which we have a primary dealership system, and practically on a weekly basis we do the issuances in quite not big amounts. For now, it stands about 40 or 50 million per week, and we reduced the maturities, and of course the general amount we increased on domestic scale. Originally we planned 1.3 billion, we add 500 million in total from that 5 billion which I already mentioned from the beginning. Secondly, we proactively start work with international monetary institutions, and it was successful issue as well, and we practically reached 1.5 billion in total size from international monetary institution, EIB, Nordic Investment Bank, and CEE. So all of three of them, total amounts, practically we reached 1 billion already. And the third one, we activated our EMTN program, which was originally planned to do more in second part of the year, due to the fact that we have usually a strategy to be prepared for redemption on 2021. And it's on March 21, we have 1.5 billion US dollars redemption. And also we activated it in more fast manner, and you mentioned that we successfully do at the end of April this dual tranche on composition of 10 and 5-year maturities. As well, the biggest amount, let's say, issued by one tranche on 2 billion total size. So it was keeping in mind that we wait a bit, not starting from the very volatile surrounding at the beginning in March or beginning of April, where the market volatility was very high. So it steps back a bit. Also, we feel that liquidity come from a quantitative easing program from 750 billion from the SEB side. So all in all, the markets becomes more calm, and we put emphasis on particular this days, and I think that it was quite good decision on it.
Very good, thank you.
The 260 accounts was listed on the deal as well. The total amounts was more than 4 billion in total size. So
2 times oversubscribed.
Classical amount, something like this.
Yuriy, let me turn to you. Obviously, that all eyes are on the IMF. Our understanding is that there's a staff level agreement on a major program being put in place, which now has to go to the IMF board. But assuming that goes through, how is that going to affect your external funding requirements or plans for the rest of this year? Will you need to try to raise more funds in order to sustain the fiscal stimulus package?
Thanks, Chris. So I think for us, it's not material difference from our pre-COVID borrowing strategy. Why? Because for this year, we had only $1.4 billion of commercial bond redemption, and all other repayments in the course of this year on external side were actually of the official nature. So mostly those money we got in 2014 and 15. So we initially, when we entered into this year, we initially planned to substitute commercial borrowing with new commercial borrowing, what we timely did in January, actually, with the help of Łukasz and his team. And after this, actually, we already were in talks with IFIs on increasing their package and preparing the package for concessional loans for this year, and obviously for country as Ukraine, having possibility to get the loan on IFI terms. It's much cheaper in terms of debt service than going to commercial markets. So we came to this crisis already in the good phase of negotiations with IMF, and yes, we just finalized it, but having standby agreement, first EFF, which was converted to standby, in discussion already, help us not to go for this RFI or any other rapid COVID response facilities, but actually stick to the more longer program, which gives more certainty to us in terms of the policy framework, but as well as to the markets. So we just pretty much upsized this program and also agreed that the funds will be transferred not to the reserves, but directly to the budget to cover increased deficit. And the same applies to other IFIs, let's say World Bank, which we had already programmed in discussion since the end of the last year, as well as EU, where we had already a facility in place. We just discussed with EU new facility, and we are happy they actually in the discussion with us and roll out the support mechanism not only to Ukraine but to many neighboring EU countries in parallel. So I would say that for us, the funding strategy for the rest of the year in the base case scenario will look at the combination of the official concessional loans on the external side and domestic borrowing, where we see that there is sufficient amount of liquidity and the banking system is over liquid, and maybe unfortunately for the business support, banks are really reluctant to issue loans in size to the businesses, so that spare liquidity is being reallocated from the central bank instruments, which decrease the policy rate, to the domestic bonds, domestic hryvnia bonds in Ukraine. So combination of two factors is our strategy, of two funding sources is our strategy for this year. Okay. Obviously, we are watching markets. We are rather wide comparing to my colleagues on the call here. So definitely not the right moment for us now, but if the market is closer to the end of the year look different for us, we might be more opportunistic.
Thank you. Marjan, you did the tap towards the end of March. Are you planning more market activity during the rest of this year?
Yes, actually, I don't know if you are aware, but we were the first, I believe, even Eurozone country which appeared on the market in
14th, yeah, of January, I think.
It was 14th of January, but we reappeared on the market on 21st of March.
Yes, that's what I'm talking about. The tap of the $850 million tap of your issue on the 26th of March. I have here.
We issued new 3-year euro denominated bond, and we reopened a 9-year bond. And then we reappeared on the market beginning of April with new 10-year and with tap of the 3-year bond. And we raised 3.3 billion of euros already, which means that we already financed the whole fiscal package, or most of the fiscal package, which is envisaged for now. So we were on a big scale on the market in March and April. I mean, there's big demand for Slovenia bonds at the moment. We are running very high cash buffer at the moment. And our strategy going forward would be to maintain very high cash buffer. So if the funding needs for this year are lower than what we would expect as per now, we would use the proceeds for debt which is due next year. So going forward, we shall maintain adequate cash position. Okay,
thank you. Odilbek, I'm not going to ask you about bond issues unless you're suddenly going to tell us that you would like Łukasz to organize one for you in the next day or two. But I do want to give you the chance to tell us just in a couple of minutes, if you would, because there's quite a few other topics I want to turn to, about the privatization program, which I know is of great strategic importance to the country and to your ministry.
Yeah, that's correct. We've been working on our strategy to privatize our assets for some time. Ever since President Želionis was elected, he started the reforms, and he recognized that the best way to manage assets is privatizing those assets. And this is very much sector by sector approach. When it comes to metals and mining sector, now we are right now modernizing these companies, introducing IFRS, getting ratings, and bond issuance obviously will come once all these actions have taken place, and then potential IPOs are planned in 2023. I'm talking about the biggest gold mining and copper mining companies. We've also started last year sort of our actions on energy sector, so distributing our energy company into 3: distribution, then generation, and transmission. Whereas transmission company will be in state hands. We're looking to privatize generation companies as well as the distribution.
Do you have a big number for the planned receipts from this program, or a range of numbers, I guess?
You mean in terms of proceeds?
Yes.
So I was saying that this is rather reform-focused privatization effort than a cash-raising exercise. Yeah, metals and mining obviously is an important sector for Uzbekistan, given that we are within top 10 in terms of gold deposits and gold production. When it comes to banking sector, the president just approved the strategy 2020-25. We want to keep 3 banks within government ownership, and we want to sell the remaining banks. Now, we partnered up with IFC, EBRD, and others who are helping us to transform these banks, and through IPO or through strategic sale, we want to sort of privatize most of it, and make sure that by 2025 we have certain key performance indicators to reach in terms of state ownership. Currently, 85% of all assets is owned by the state. We want to decrease this number to 25–30% range by 2025. So
if I may interrupt you there for a second, Odilbek, what I think is particularly interesting about what you're saying, and you remember, all of you, that one of my questions was never waste a good crisis. Are you planning structural reforms to take place after this crisis abates, after COVID-19 abates? What you said, that it's not simply about gathering financial assets or creating financial assets out of industrial assets. It is in terms of cementing yourselves to international standards of governance, transparency, and ownership, and so forth. So it's a policy thing. I know it was planned before COVID-19 hit us, but nonetheless, it does seem a good time to get that kind of structural reform done.
You're absolutely right, Chris. And the government's intention is to continue with the reforms, the structural reforms. Some of them are quite painful, but we have to go through them, because we as a country waited for a long time when some of our peers, even from former Soviet Union countries, they've gone through this privatization drive. Sure. We actually didn't do that in the last 30 years, in the last 20 odd years. And now over the last 3 years, we've started this process. For some countries, it's back to 90s, right? When those things happened in 90s. But you know what? We have one advantage we have is the benefit of hindsight. We know that which countries benefited, how they did it, some fire selling, some even more strategic, like Poland, which we like, more strategic, growing their capital markets domestically, IPOing, SPOing their assets.
Odilbek, we could have a whole discussion on this, but unfortunately we can't at this point. But I look forward to doing that with you, Łukasz. I'm sorry, I haven't turned to you for a little while, but the client side here is speaking. Are you under the strong impression that markets are open for CEE credits? You're not feeling any pushback on that? Everybody, of course, has successfully issued. We've heard about Slovenia. We've heard about Lithuania. Ukraine's obviously at a slightly different stage. But what is your view for sovereign issuance in the region, from the region?
I mean, I think it was very good that we had sovereigns coming so fast back to the market, and the market took it. And since let's say few weeks, actually, we have continuous offering happening. Last deal of Romania happening on the 26th of May. So I think as of now, I would see that the countries and the perception of the investors is okay, and we are happy to support that. Coming back to your previous question on the needs, I think the approach which was mentioned with having a cash cushion is also very good, because what we don't know what will be the impact of this situation also on tax collections next years, and what really the kind of gap in the individual countries will be. On the other hand, as Yuriy mentioned, that there are different instruments, and fortunately right now the countries are in totally different position that were 10-15 years ago, so can choose between different instruments. And I think this is very important, that we are not hanging on one very important hack, which is markets, but there are other possibilities, which of course, from markets point of view, we are very happy to facilitate and support.
So a benign and positive picture. I'm going to introduce to our discussion now quickly, and we won't all have the chance to speak on the two topics, but two sort of geopolitical questions, which seem to me perhaps of particular relevance to the region. One potentially rather positive, the other potentially less so. Łukasz, I'll stick with you. I'm going to give each of you a choice, which of these you respond to, or perhaps you don't want to respond to either. But one is, it seems to me that there is, in the sort of new normal that we're going to grope our way towards, driven largely by disengagement from China, by Western manufacturers and companies of all kinds. Duplicate and alternative supply chains are going to be needed, are going to be sought by companies. Perhaps that's bad for productivity at a global level, but potentially I would have thought it was good for some of the countries in this region who may be able to act as alternative suppliers to companies who wish to diminish their exposure to China for whatever reasons, political or economic. And the second, which is the potentially good one, and the second thing is, it's fair to say that France and Germany have not been seeing entirely eye to eye in terms of a EU united response to coronavirus. Corona bonds briefly raised their head, but don't seem to be likely to become a reality. I wonder what, I mean, Łukasz, you represent I know you're Polish, but you're sitting in Austria, which of course is one of the frugal four, and the Austrians, along with the Dutch and the Swedes and so on, are very much against corona bonds. But I wonder if any of you sees potential division. Of course, there was the German Constitutional Court ruling the other day, potential division in the EU as a problem. So, Łukasz, you could answer either or neither or both of those questions very, very quickly, and then I'm going to offer the others the chance to pick one and talk briefly about it.
So very quickly on the first one first, I think what this crisis is showing us, it's another risk to be managed. And I think the examples which you gave, for me, it is similar what we have in capital markets business. For many years, we are already having second locations where we can put our traders if something when something happens in that location. And I think in the supply chain, we will have the same situation, that companies will just need to more diversify and somehow make sure that in a crisis situation they can switch from one to another. So this I view in general as a kind of opportunity. Because like in my example, we actually need one location, but we are contracting for two. And on your second one, if I may still just very, very quickly, I believe it is important to always understand the different forces and that they are coming to the surface and they are getting transparent, because when you know it, you know what to talk and what to change. I believe in Europe, and I believe the way forward for Europe is to stay together, and it's good in a way that let's say the views are represented, and let's deal with them.
Marjan, you're of course both in the EU and the Eurozone, so you're probably going to pick China as the topic you want to talk about, or supply chain diversification. What do you think?
Well, actually, I would very much like to support and welcome the initiatives of Germany and France for the common EU response as they proposed, as European Commission proposed recently. But as far as the China is concerned and global development, I mean, I expect tensions globally. I expect I mean, certain degree of decentralization, but normalization in a couple of years' time. So I think that economy will be again looking for cost competitive production in a couple of years' time. So these kind of things shouldn't be forgotten, but will be. So I believe that the economy will be looking for cost-efficient production soon.
But does that necessarily mean China? Might it mean Nigeria? Or
yes, indeed. Yeah, absolutely. So there will be more broad scope for this kind of production.
Okay, so to prompt you just a little further, Marjan, if I may, you do see the possibility of permanent changes in global supply chains and in the sense of greater diversity?
Indeed, yeah. So there will be other locations which will be competing for this kind of a production. China can potentially lose on their share in the global economy, but I mean the economy global economy will adjust to this situation. But
I'm sure of that, yes. But I just wonder if anybody thinks it means particular opportunities for your countries. Audrius, again, you're EU and Eurozone, so are you happy with the way the EU is collectively responding to the crisis?
So in the beginning, of course, it was a bit strange situation that coronavirus shows that every country tried to separate each other, closing borders, whatever. So it was the case as well. Also competing with possible taking some medical equipment from China and delivery, and even such strange and stories in this respect in this competition. Even sometimes with the United States, whatever, so it was the cases. But at the same time, it shows that how deep it was, this supply chains was become like the old net, and it shows that if something happened, even in China, it could be for everybody be painful. So I think that this gets the opportunities also to redirect or change something. And in this respect, of course, for the Ukrainian economy, from an economical stance or economical side, recovery of Europe, it's extremely important because it's now the key direction of our export is EU. So this means that recovery in it helps us also to recover our economy as well. On political side, of course, another kind of story, because it's a lot of problems still in place. And of course, Marjan already mentioned about this new fund on 500 billion on total. But it also goes like the composition of different political problems related to EU budget as such. As well, coming back to some Brexit events and discussing in the whole range. So for politicians, it's now becomes very hot time of period, and for finding some common solutions. But I hope that compromise seeking the key feature of Europe, and it becomes strong afterwards.
Thank you, Yuriy. Ukraine has not been a stranger to geopolitical pressures, let's put it no more strongly than that. Just very quickly, how do you respond to this? I mean, do you see the opportunity for Ukraine to pick up contracts as people move away from China?
I think that it's not a question about even China on its own. I think what this crisis shows clearly that logistic matters, and that the companies will probably try to keep supply chains shorter and closer to their markets, where we can expect some move from globalization more to some kind of regionalization in this sense. And speaking about EU market, obviously, we already had in Ukraine this, for example, German Mittelstands, like this mid-sized companies who are participating in the car production, moving the most labor-intensive parts of their production to Ukraine, as well as to other neighboring countries with cheap labor force, but with good logistic connection to the car producing facilities, let's say in Slovakia or in Poland or in Hungary. So I think we can expect on this trend to increase. We can expect on more labor-intensive production to be moved to countries like Ukraine or like Balkan countries with comparably cheap and comparable and cheap labor cost, contrary to EU countries where the cost of production is higher. So that's the question of creating the business environment, business-friendly environment in those countries, and especially in Ukraine, for these investments to be coming here.
I imagine that Odilbek might want to add Uzbekistan to that list of potential beneficiaries. Of course, one of the things that is notable about Uzbekistan is its large and growing population, which of course has got to be part of your plans from this point of view. But do you like what you've heard from the others, and do you agree with what people are saying?
Unfortunately, European Union is far, far away from us, unfortunately. So what's happening between Germany and France, well,
Forget about that.
It really doesn't matter. When I was in London, it mattered more. But now, in terms of China and in terms of supply chain, one thing well, history repeats over and over again is when there is private entrepreneurship, when there is drive to lower cost of production, people always seek for alternatives, and China does offer that. You like it or not, you know, with a less global world, more regional world, you know, you name it, as you name it, more nationalistic politics, whether it's in Europe, in the US, or in other global economies. At the end of the day, the single most important question is how much is the cost of production, which will define the competitiveness of one or another company, entity, country, and you name it. Of course, we in Uzbekistan hope to get some, to be involved in that supply chain. Yes, we need to, we have, you know, relatively cheap labor cost, we have the resources, we have growing population, talented people, etc., etc. I mean, I can grow the list, but we are far away from the key markets. So that's our big challenge. And in order for us to grow, in order to be able to be within the supply chain, China is very, very important to us. Both the country of import, China is #1 trading nation for us, and export. And also, you know, other countries surrounding us, Russia, including Russia, and including Turkey, Iran, to the extent possible that we can trade with Iran, and South Asia, Afghanistan, India, Pakistan. These are all important markets for us.
Sure. I can tell you're very keen not to appear favoritist towards anybody, which is absolutely fine.
Indeed, sir. Indeed, we cannot afford to do that.
No, exactly. Łukasz, we've come pretty much exactly to the end of an hour, but a couple of points arising from what these guys have just said. A couple of them mentioned less global, more regional worlds. I mean, put your sort of citizen of the world kind of Davos man hat on. I hope you don't object to that characterization. Is globalization going into reverse? And if it is, should we worry about that?
I think in all countries' governments, but also in the boards of companies and also individual entrepreneurs, recently the term of the new normal is coming quite often, and I think this new normal will, in a way, strengthen the globalization in terms of moving into digital sphere, which is global in a way, because even now we are having these panels sitting and discussing important things, but sitting in many locations, but somehow united. Yeah, we see each other, and I enjoyed very much this chat. On the other hand, as example given, something can be impacted, some behaviors, and for sure we don't know what the new normal in analog world, in our physical interactions will be, and that might be a bit regional. So I would say it will be another chapter, but I would for sure not subscribe saying that we will like move back. Maybe we will move to some new dimension, but not backwards.
Okay, good. Well, we still think, of course, in terms of regions. We are thinking in terms of a region right here, a broadly defined region, but nonetheless region there's a coherent historical reason to think of it as such. And of course, what I've heard, what we've heard, what our audience will hear from all of you, is a reasonably optimistic and well-planned vision of the future of the emergence from this crisis. And Audrius, I'm afraid we didn't even get to talk about Lithuania's booming fintech sector, but I think Łukasz has just mentioned it, mentioned the context in which that is happening. So, gentlemen, thank you very, very much indeed for taking part in this.